Hello, everyone. Welcome to the Money Talk. I'm Johnny.
And I am Theresa. And today we have Dr. Jeff with us, who is an expert in real estate investing, and he's also a physician. So, Dr. Jeff, can you give us some information about you today?
Sure. Born and raised in Louisiana, not too far from you guys in Texas. I about 2 weeks before I finished my residency at LSU, my wife and I, we had a 2-month-old who's now 19, so time flies. $300,000 of student loan debt, and we had already bought a house thinking that we were going to join a group practice. Unfortunately, that didn't work out. It fell through, and you can imagine, being a young couple with all that debt and a newborn, just how stressful that was money-wise, because they don't teach you anything in medical school or dental school about money or how to run a practice or business. So that was some very trying times for us at that time. But luckily, I had somebody reach out to me, let me come work with him. He kind of showed me the ropes. And now back then, this was '05. Dave Ramsey was, one of the there wasn't a whole lot of, financial gurus back then. So he was like the main one and I was actually listening to him. And this incident really set me back like into scarcity mode, just I was raised in a household blue collar that, everything costs too much, that's too expensive. We can't get, so I always heard that. So to me, I was thinking limited, money's limited, whatever you have to save it, put it in a bank, put it under your pillow, whatever. So that's just how I was raised. And that's how my parents were raised. Nothing wrong with that. But so when this happened, it's really put me back into literally survival mode because, I had a kid and I actually started mowing yards again. I was probably the most well-trained yard guy in the country, but I used to mow yards in high school and college, and, I had to do whatever I could to, to pay the bills as I was building my practice. But anyway, I followed the Dave Ramsey path, the 7 baby steps, and I'm glad he gave us some structure, and after about 7.5 years, we had paid off the student loans plus that first house that we lived in.
Wow. Wonderful.
And I'm thinking, oh, okay, it's great. Now I'm going to work for the next 30 years like everybody else. But 3 years after that, we went snow skiing, and my kids were, I think, 8 and 6 at the time. And I fell and I hurt my hand. And that was my wake-up call to, if I can't use my hands, I can't provide for my family. And that pretty much led me down the rabbit hole of looking at what wealthy people do, and eventually to real estate, and then teaching others about it as well. So that's the short version of a very long story for you.
Well, very interesting, because you are in the medical profession and you transition from the medical profession to real estate. Could you tell us about that, and then some of the challenges that you face with that?
Yeah, when I started looking at what wealthy people do, how they operate, it was like everything that we've been taught was the polar opposite. Because, Dave Ramsey, he's speaking to the masses. So it's, anti-debt, no debt. It's pay off everything and never have any more debt, no credit cards, and 401k and work, and then you'll be a millionaire by the time you're 65. And that's, that for most people, that's a really good goal. And when this happened with my hands, I realized, well, that may not work out that way, if I can't work or something happens. And I noticed that a couple of things about wealthy people. 90% of them or more had real estate in their portfolio. And at that time, I didn't have any. And the majority of them had anywhere from 7 to 9 income streams. I'd never heard about, I was just thinking you just get one income stream and that's it. And once I started looking at the Donald Trumps, the Jeff Bezos, the Warren Buffett's, and I always kept hearing about their taxes, and they don't pay that much taxes. Then I started realizing, well, they have all these income streams coming in, and they're all from these different sources that are taxed very low. But what is everybody, everybody's either an employee or they're self-employed, but that's the highest tax bracket. I was just thinking, well, we're always told the more you make, the more you pay in taxes, right?
Right.
Literally everything that I'm learning, what these people do, is the polar opposite. And everything kept centering around real estate. I mean, that was one of the starting points of how people did it. And that, and as I was learning all this, I started a blog, debtfreedoctor.com. So I just started what I was learning. I just started writing articles, and eventually started doing YouTube videos. And it's just slowly grown. I've grown a following. And, in my opinion, if you have something that helps you and you can share it, then, why not do it? kind of like you guys are doing on this podcast. The internet is pretty much free, and not a better platform to do it.
Right. Did you have a lot of oppositions though when you was making that transition? Because going from dental to real estate, that seemed to be, that would be kind of scary
Yeah.
to me.
Yeah, for sure. I mean, I've definitely lost money, and I had partnerships fall through. But I think the main reason why people don't accomplish their goals, whether it's money, it's health, relationships, whatever, they don't have a big enough why. And my why was, I have to find something in order to provide for my family if something happened to me. That kept me going. Think about the overweight people that you see, and you hadn't seen, somebody that's 300 pounds, you hadn't seen them in 10 years. And next time you see them, they're 150 pounds. You're like, holy cow, how'd you lose all that weight? 9 times out of 10, chest pain, heart attack. It was something that happened to them. And that was their why. Like, I don't want to die. And, and I have it written down. Well, I have it written down right here. Our pastor told us the other day, this is a great passage, and I look at it every day. We don't change without pain.
Wow.
We don't change without pain. And people don't like to change, right?
Right.
That's just how we're wired, and because we're complacent. You're listening to people now, they're getting into cold plunges and saunas. It's either hot or cold, and people don't want to do it because it's uncomfortable, yet it's so good for you. So with what I was doing, it was uncomfortable, but as I was failing and I started looking at how successful people operate, they don't call it. You're always taught, don't fail on your test, or don't lose your football game or basketball. You don't want to lose, you don't want to fail in life. But so that's the way. Again, it's totally opposite. We're looking at it from, oh gosh, I lost, or I failed, or I lost money, or whatever. These people are like, oh, look what I learned.
Right.
Well, I don't call it failing anymore. This is what I learned. I learned not to do this anymore, or I learned not to deal with that person anymore. And it's just a different mindset. And I think everything starts with the mindset and how you approach things. I think God gave us a brain for a reason, and we should,
Right. And like, before we get to mindset, you mentioned, okay, the Dave Ramsey program, being debt free, the no credit cards. Okay, so like, to get into real estate investing, how can you do it debt free?
That's a good question. And one of the books I haven't, this really changed my mindset. I don't know if you can see it. It's called Who Not How. Dan Sullivan, Benjamin Hardy. Who Not How.
Who not how.
Everybody asks the how question. How do you get into real estate with no debt? I was thinking, like, how do I start a YouTube channel? How do I edit the videos? How do I make the thumbnail? And you just find a who to do it for you. And once you change that thinking, like you probably thought when you started your podcast, how do I start a podcast? How do I edit? Right?
Yes.
But probably more than likely, you probably found a who to help you. Maybe you help each other or whatever. And so when you start thinking that, because, Walt Disney, I have my little thing over here that says, if you can dream it, you can do it. All you have to have is a thought. Once you have a thought, so think about it. I turned 50 years old this year in August. So in 1974, our parents, they didn't have cell phones. It wasn't internet. There wasn't any of that. So if you were to go back 50, I'm not talking about 100 years. I'm not talking about 200 years. I'm talking about just 50 years ago, 1974. And you were to tell somebody that I could be in Monroe, Louisiana, and talk on a camera to somebody in San Antonio, they'd have thought you were nuts.
Right. Beyond nuts.
That I could take a picture and I could send it to you in 1 second. Like, what are you talking about? So that's just 50 years ago. So again, if you can dream it, you can do it. All you have to have is that thought in your head. And if you really want to get into real estate, or you really want to lose weight, or you really want to do whatever, just here's the cheat code to success. Find whoever has what you want, or whoever's doing what you want, and get them to mentor you or pay them, because your time is the most important thing. Why spend 2 years on your own when you can spend 2 months and pay somebody? And now look what you're doing. Instead of wasting your time for 2 years, you know what to do. You got somebody to help you. 2 months later, boom, you're on your way.
I like that. That is so good. And see, like, when I think about real estate investing, I don't really think about the who. I think about the amount of debt that it will take just to even get into real estate investing.
So there's I stumbled into it by accident because I was investing in these real estate syndications where you just kind of like you just put money in with other people. You pool your money and you go buy, we're buying a bunch of RV parks now and mobile home parks. I thought you had to go out and get a loan, buy a house and rent it out. But there's so many different ways to get in real estate. And then I was going to be investing in an apartment building in Dallas with a group. Typically the minimum is $50,000 in these projects. So it's not like hundreds of thousands of dollars, sometimes it's less than that. So they said, Jeff, since you're investing in this project and you have a few people on your email list, at the time I had like 200 people. If we do everything, get our attorneys to do everything legal and make you one of like the partners, do you want to see if some of the people on your email list want to invest in this project? I was like, okay, because I'm just sending out emails to people, like article or video. So I took the email that they had where it explained the project. They could look at the pictures, they could look at what the returns were. And I kind of changed up their email and I sent it out to my list. It's like 225 people. 48 hours later, I sent out like a follow-up one. Now, granted, they're sending emails out to their people too. So after 2 emails in 48 hours, they emailed me back and they said, okay, we filled up the deal. You don't have to do it anymore. So, okay. And they said, you raised $2.4 million in 48 hours. And I was like, what are you talking about? So it's who, not how. I found a who that had projects, and then I had people. So because I use OPM, other people's money, now I'm a partner in that real estate deal. I don't have to use any of my own money. And that started this capital raising. Now I think I raised $25 million last year, all online. So it's incredible what can happen, who you could meet or whatever. So it's crazy what the internet can hold,
It sure is.
It is. So that required really, like you said, a mindset shift on your part, because in the medical profession, you don't necessarily have to deal with, I guess, like being finances or whatever. You're dealing with patients and stuff. So you had like a non-financial like background, right? So
Oh yeah.
So you went from being in the medical profession, shifting your mindset from a non-financial perspective to financial perspective. How did you go about doing that? I mean, because that's a big shift.
Well, I think I've always liked learning about money and that sort of thing. I've been curious, and again, it was that why, that strong why that was just guiding me over. And as I was learning all these things and meeting people and networking with people, just making connections, I got in. So when I started raising capital, I joined this group online, people from all over the United States. And when you get in, you introduce yourself. Hey, I'm Tom from Texas. Hey, I'm Jim from Minnesota, whatever. So a guy introduced himself. Hey, I'm Caleb from Louisiana. I said, okay, there was nobody else from Louisiana but me. At the time, it was like 200 people in this group. This was 3 years ago. I reached out to him. Come to find out, he lives 5 miles from me. Out of all the people in the United States,
5 miles.
5 miles, and he was in the mobile home park business. We just closed on our 5th mobile home park together in Louisiana because of that one connection. I mean, it's crazy.
It really is. And so now that you're talking about strategies, you gave us this one strategy with groups. Have you found a specific strategy that helps you build wealth, like one that's, more productive than another one?
I would say the quickest, of all the things that I've found, really the quickest thing is networking and helping. Everybody needs capital for their deals, whether it's businesses, real estate, whatever, and connecting with people that need the capital, that are trustworthy people, and then bringing investors that, connecting the two together. And then because of that, I'm compensated as one of the general partners. And to me, that's been one of the quickest things that I've noticed. What I like about it is it gives me cash flow now. So now I have other streams of income coming in. Again, if something happens to me, those income streams will help pay the bill. And so like one of the trailer parks that we have, it pays our home mortgage right now. They don't teach you that in medical school. You're always thinking, I've got to go make more money to buy a boat, a car, or a house. I think like I'm going to go, like my wife wanted a pontoon boat, and I waited and I waited. And after a year and a half, I bought an RV park that pays that for that boat. It's just a different way of thinking. So when the boat is paid off, I've got an RV park that's still paying money. instead of saving up all your money and you trading time for money to buy something that's going to depreciate in value, like a boat or a car or something. Yeah. Again, that's a different way of thinking. You know, that's the Dave Ramsey way. Save your money, pay off a car. That's fine. And that's great. And that's what I used to do. I did that for the first 3 or 4 cars, but now I understand. Once you understand and you have enough financial education to where your assets pay for your liabilities. That was the big mindset shift for me.
So how do you protect yourself from getting scammed?
As in
When you do these group deals?
That's the $1 million question. And it takes networking. It takes asking other people. So for instance, let's say your husband gets some sort of rare cancer. You would do everything that you could. Well, maybe. I'm sure. more than likely, you would do everything that you could to find a doctor, to find a specialist, find people. You'd be reaching out to people to find the right. So it's kind of like that. It's like, okay, well, here's 3 different groups, and I start asking around. There's people at networks to where you can be with investors and those other people, and you say, hey, you ever invested with that group over there? And they would say, well, I haven't invested with them, but I've invested with those other 2, and this one's the better one. And you just start asking around. And really, like anything in life, there's only a handful of them that are good, and it doesn't take long for the cream to rise to the top. Yeah. So the more that you're in it, the more you realize, the kind of like, anything like a shoe company, there's a ton of shoe companies, but there's only just a few that are really good,
Right. So you all had to get a lawyer, you had to get paperwork drawn up and all of that, right? Before you became a part of this type of group to invest in real estate.
Well, they have all their own stuff.
Wow.
All their own attorneys, and they have all that stuff, and they just it's not as hard as you think.
Okay. All right.
Okay. Well, Dr. Jeff, I know that you mentioned at the beginning of the show that you had a substantial amount of like student loan debt. And so what advice would you give? Because that's one of the crises these days, student loan debt. So what advice would you give to like a student or a graduate out of school that has this substantial amount of student loan debt? What advice would you give them to manage that and then also be financially successful with managing student loan debt?
Well, the way I have to answer it is from my personal experience, and I just didn't want that over my head. So I did everything that I could. I took extra jobs. I was mowing yards, anything to pay it off. Because and Dave Ramsey talks about this. Student loan debt is not bankruptable. So if you go bankrupt, you still got to pay back your student loans.
Right.
And you get out of college, you get out of law school, medical school, dental school, whatever. I mean, you're not making anything, or used to living in an apartment probably. Well, just keep living like that for a few more years. And you go from making nothing to 6 figures. Why not just toss it at that student loan, and then you're done with it? Because as you get older in life, you got kids, you got cars, you got everything gets more expensive as you get older. I don't care what they tell you. I got 2 teenagers, and you should see our food bill is as much as our mortgage, Yeah. And so it's like, now is the time to do it when you get out. That would be my recommendation.
Okay. So like when you had that setback, when you first got out of school, did you and your wife with the new baby have to go live with your parents, or were you able to like afford at least a small apartment? Like what sacrifices did you make?
Well,
other than
we had already bought a house, remember? Because I thought
you did say that.
Yeah, they already had a house.
Yeah, so that was like, that got me working overtime. Luckily they were able to do like an interest only loan for like a year, so it kept the payment low. So I had enough to pay down, pay a little bit down, and after about a year, I was able to put the 20% down, and then start paying or whatever. But everything, I think I had 6 or 7 student loans, and I just did the debt snowball. Started with the smallest one, had a little like a little whiteboard behind me, and every day I would look at that number, and it was going down and down and down. That kept me going.
That is definitely a lot of encouragement. And so now that you've been on this investment journey, I'm sure you've had at least 1 or 2 setbacks. Can you tell the listeners, maybe give us a story about one of the setbacks that you remember the most and what you did to overcome it?
Yeah, it was one of the ones early on. That was when crowdfunding was starting to be real big, like in 2017. That's when these websites would put up properties, and you would look at them and you would put your money in it. Okay. So I did a little bit. I did like 2 or 3. Wasn't much, like $2,000 or $1,500. So I said, all right, I'm gonna go. I know what I'm doing. I'm gonna go big time. I'm gonna invest $50,000, and it was an apartment complex in Tulsa, Oklahoma. Well, little did we know that this guy bought this apartment in an area that was very crime infested, and everybody was moving out of the apartment building. So he got the bright idea. He's going to fix up the apartment building, and everybody's going to magically come back. Guess what? They didn't, and everybody lost their money, including myself, 50 grand. So that was a huge setback. So to go back to your original point, that I failed, but I learned. I learned never to do crowdfunding again. And I learned that whenever I invest from here on out, I'm going to go to the properties. I'm going to meet with the people. I'm going to be more involved, because at that time I didn't know what the flip I was doing. It was me, and I wrote an article about it. And it's funny you say that. I got a sticky note right here. A guy reached out to me yesterday from a really big company that is writing like a national, it's going to be a published national article on the crowdfunding space, because something recently happened, I think with CrowdStreet or one of the big crowdfunding things. And he was doing research, and he saw my article, and it was like how I lost money, 50 grand or whatever. And he's going to feature me in the article. So again, even though you have failures, put them out there. That was 2017. You never know how long you never how long it's going to be, but somebody may pick it up. You may help somebody. Hopefully this will get out and tell people that that's not really the best way to invest. Kind of like the Bernie Madoff thing, people started talking about that. Kind of similar to that.
Well, can you explain crowdfunding?
Crowdfunding is, I guess you could kind of say it's kind of like eBay. You go on a website, you're looking at pictures of properties, and they show you like, okay, well, here's an apartment complex, the minimum's $20,000, and here's what the expected return would be. We're going to hold it for 5 years. And they'll tell you all about it. And here's what we're going to do. We're going to fix it up, and you're going to make this much. And I was just looking at numbers. Well, guess what? Anybody can make up any number.
Oh, yeah.
Because I went back and looked at all the original numbers, and they look great. But again, it starts with, you got to really look at who you're dealing with, hit the sponsors. You just put your money in, kind of like investing in Vanguard or Fidelity. You put your money in like a mutual fund or something, and hope that it's going to give you a return. But you're relying on the website to quote vet these people, which come to find out they weren't. So if you want something done right, you do it yourself. So that's why I started investing with people that I knew. And then now I started a company with my business partner 2 years ago, and we buy RV parks. So we bought 17 of them now. And we're going to get, our goal is about 30 of them. And then we're going to package them up and sell it, try to do it like a big exit. Again, that was just a connection I made online. So it's crazy.
And Dr. Jeff, what about the people who only make like $80,000 a year? Like the opportunities for them to be able to get into something like this would probably be pretty hard, right?
Well, yeah, these investments are for accredited investors. So, you have to have a certain amount. But again, you don't have to do that type of investment. You could go out and use other people's money and buy something and learn how to do it and manage it, and away you go.
Okay. Wow. So that's an idea for that.
Yeah.
All right, what you got?
OPM, right?
Yeah, other people's money.
I like that one. So one of the things that you mentioned too was about, I guess, balancing, doing, I call it work-life balance, where you have your health and your relationship. So how did you balance that, and while you were trying to pursue your financial goals?
That's a great question. I think that's where people are out of balance out of something like that, because right now I guarantee you, whoever's listening to this, if you have a problem, it's going to be one of 3 areas: health, wealth, or relationships.
Right.
More than likely. So I made it a point early on to really spend as much time with my family, but I wanted to keep my health because my profession, there's a lot of neck pain, back pain, shoulder pain. So I schedule it in my day. I exercise 6 days a week.
Wow.
I did a lot of coaching with my kids, so I got to, exercise with them. One of them is playing tennis right now in high school, and one of them is a college quarterback here one of the quarterbacks at the local college here, ULM, University of Louisiana Monroe. So I want to be able to get out there and throw and be healthy and not be out of shape. So that's really important. What you eat, it's not like going on diets or doing these fads. It's just a lifestyle. And
Right.
because, I mean, if you had $1 billion, but yet you couldn't get out of bed because you were too unhealthy, what's the point?
It's useless.
Yeah. So it's health, for me, health is way more important than wealth. And you just have to prioritize it, whether you got to wake up early or stay up late or go at lunch. And I mean, but really 80% of it is what you eat. And
It
again,
is.
it's the opposite thing. Everybody thinks, you got to work out and do all this stuff, but yeah, it's good for you. But if you want to stay healthy, it's literally just, I track my, what you measure, you can improve. I track my macros. I know what the calories I need to eat. I know the protein. I mean, it's idiot proof. It tells you need to eat this, and you start plugging in. At the end of the day, you go, okay, well, I got 500 calories left and 20 more grams of protein. I just ate an egg white omelet with some cheese in it. It's just it's easy.
That's a smart way to do it.
That is.
If you're not just too lazy to keep track of all of that.
That's
But
true.
that's good. Yeah, but you have to be motivated and you have to really want it.
Yes.
That's true. Anything with anything in life.
That's right. And then I want to know, because of your experience, can you give us a few of the misconceptions about financial freedom that you've come across? Because I guess we all have different ideas about it, but I want to know, what are some of the misconceptions you've come across?
I think the big thing is we have to work until you're 65 or 70. Everybody talks about, if you just put a little bit of money away, you'll be a millionaire when you're in your 60s. And how many people do that retire, or they get to retirement and they have a heart attack, or they die, or they can't enjoy themselves,
Mm-hmm.
So to me, I would rather replace my expenses now. Let's just say your expenses are $7,000 a month, mortgage, food, cars, everything. Well, just focus on getting other streams of income in to pay for your expenses. And guess what? You're financially free. It's just, again, it's a different way of thinking. So that's the big misconception, is you have to work a job your whole life to hopefully have enough money you don't run out of money. And it's just it's totally opposite. Like our trailer parks and stuff and RV parks, everybody talks about inflation. Just raise the rent.
Right. And you get
If you
more
go,
money.
if you go to a restaurant right now and use a credit card, what do? They charge you 3%, don't they?
They
They
do.
do. Yes.
Why they do that? Because inflation. They don't care. I'm not being unfair. I'm just, okay, well, my costs go up, so I just pass it along. I don't worry about inflation. But everybody's, talk, oh my God, inflation and this and that, because you're in the stock market, you don't have any more money coming in except for what you're trading time for money for.
Dr. Jeff, we have to touch on this, and we'll let you go, because I'm sure my husband has at least one more thing for you. But what's so disturbing is that we are raised to, you go to school, get your education, get that job, and you stay in that job until you're 60 or 65. And a lot of times now, because really people's health, Dr. Jeff, by the time they get 65, they don't really have the energy to go out and do anything, if they don't even die before they get to that point. But like, if you can come up with a way to have an additional stream of income to cover your bills, liabilities, your cost of living.
Multiple
Streams. And I'm like, that is so impactful, what you said. It's these young people, including us too, we were taught to work until you were retirement age. And not to be disrespectful, but that is a horrible way to live. Like, if you just got to stay in a job until you're 65, and if it's a job that you don't even like, but it pays the bills, Dr. Jeff, that's a miserable way to spend the life that God has entrusted to you.
Yep, you're exactly right. So I think that I like to call it work optional. I don't like to call it financial freedom, because I just want people to get to the point where work is optional. And think about how you would, if you went to work. Like, if I go to work and work is optional, I don't need the money, and somebody comes in, they're working their butt off, they're working 2 jobs, they need work done, they're in pain. Guess what? I can do it. I don't need the money. I'll do it for free. Think about how people would operate like that in their jobs if, like, they didn't need the money. How many people they could help, how you would treat your employees, how employees would treat each other. It's just a different way of thinking. But we're just taught the system where they give an 18-year-old $100,000 student loan debt, and they're trapped for life. And now they're just in the rat race.
Trapped for life. Because there's so many people now that got these student loans that's in 6 figures. Dr. Jeff, depending on the job that they got, they will never pay them things off, ever. They will die with them.
Unless they get a strong enough why, like I had, that's what it'll take.
Right. And many people don't even have the drive no more. They'll just say, I'm going to have it until I die.
I don't know if they got the drive, but they're just kind of lazy and don't want to have the drive, because sometimes you might see it and you know what you need to do, but you don't do it because you don't
Well, most of the
necessarily
time you don't know, like my kids, they're teenagers, they bring their other teenagers over.
Mm-hmm.
And I wish when I was growing up, I had some really wealthy friends. We weren't wealthy at all. And I would just wish their parents would have said something to me or whatever, just to got me thinking. So, I mean, so for instance, there was a kid over, I don't know if people are listening to this and aren't watching it. I'm white, and my kids, they have a lot of black friends. They got a lot of white friends. So there's always mixed people around. And little black kid came in the other day. Well, little, he's big linebacker, and he said, I'm going to go to junior college and I'm going to play. I always talk to him like, what are you going to do? I want to go to law school. I said, excellent. I said, what kind of attorney you want to be? I don't know. I said, you ever think about real estate attorney? What is that? I said, well, you see this house? I said, yeah. I said, anytime anybody buys a house or property or whatever, they have to sign a bunch of paperwork. And guess what? You're a real estate attorney. They'll pay you to do it. He's like, really? It's like, yeah. And I said, here's the catch. You don't even have to be at your office. You can be on the golf course. You get somebody else to do the paperwork for you. He's like, really? I wish I've never heard of that. So you have to like speak life into these people and these kids. He's like, nobody ever told me that. He's like, my parents never told me that. And I said, well, I never told me that either. I'm just telling you, whether or not he does or not, but at least you get them thinking. You put a thought in their head. So I'm always talking to them, asking them questions, because you never know what people's upbringing are, and if you could just affect or help one person,
right,
that's worth it.
Oh yes, it's so worth it.
It is, and you plant the seed. That's why I look at it as you plant that seed, and that seed, it eventually sprout into something, right? So that's wonderful.
Yeah, he'll never forget that.
No, he won't. And who knows? One day you might even see him as a real estate attorney.
I'll hire him and I'll pay him the money.
And he'll be on the golf course.
Yeah, I'll gladly do it.
Right.
Got anything else you want to add?
Just one more thing. So looking back, right, when you start this journey, do you wish you would have done something different, or what if you wish you would have known something different before you start the journey that you're currently on that would have helped you out?
100%. 100%. Whatever job you're in, like if you own your own business or practice like I do, if I could go back, I would have replaced myself as quickly as possible. Meaning I would have gotten somebody to come in, a partner, an associate, or whatever, so I could go and take summers off, or I can do something instead of, I can't leave. I can't take a summer off. I could barely take a week off, because if I'm gone, the business is shut down. So replace yourself. I'm sure you've heard of the cash flow quadrant from Robert Kiyosaki. I don't know if you've heard of that before.
I heard of him, but I don't remember that. And I've read his book too.
So the cash flow quadrant is if you make a cross, in the upper left-hand corner is E, quadrant, employee, and the bottom left is S, self-employed. Most people are on the left side of the quadrant. He calls that the poor quadrant, because they trade time for money and they're taxed the highest, right? And if you don't go to work, you don't get paid. The goal is to get on the other side, the B, top right, business owner, who has people. Think about a gym owner. He doesn't have to be there, right? He's got people working for him. My friend owns a gym here. He takes off months at a time. And then the best quadrant is the bottom right, the I, investor, where your money is paying you every month, whether it's businesses, real estate, whatever, dividend paying stocks, mutual funds, whatever. So that's the goal. And all that income on that right side is what we talked about earlier. It's taxed the least. And I think it starts there. It starts with a mindset shift. Thinking about money differently. I used to think, money like, okay, $1,000 was a lot. And then as I got older in life, I got to the point where I added a zero to it. Well, $10,000 is a lot. And then now I'm at the point, it used to be $100,000 was a lot. But because of the transactions and stuff, so just as you go, you just keep adding zeros to it. And that's when you really start seeing your wealth grow, because you're just not stuck in that, okay, I make 80,000 a year and I'm happy or whatever. I mean, if I put a gun to your head and said, you have to make double, let's say if you made $80,000 a year, you have to make $200,000 a year by next year, or I'm going to punish you, or I'm going to do something really bad. You would do everything that you could. You would start thinking differently. That's how you have to approach it. Instead of just, I'm going to go to my job that I hate and make 80 grand a year and complain, which is what most people do.
Yeah.
That's what probably 90% of the world does.
I mean, here's something really easy people could do. Like this week, I got 4 checks in that were like totaling 5 figures from affiliates, meaning I told other people to use my accountant or my different groups And because I'm telling them, they pay me. I mean, it's as easy as that. If you wear a certain pair of shoes or you wear a certain pair of socks or these companies, they will pay you. All these, you go to Amazon. If you tell somebody, hey, buy Rich Dad, Poor Dad from Robert Kiyosaki, let me text you the code to do it. They give you a code, and guess what? You can give it to anybody, and you buy it, they'll pay you. That's a great way to start. Just zero money. I mean, it started off real small, but now it's gotten bigger and bigger. But you got to start somewhere. You have to start.
Right. Okay. Well, Dr. Jeff, we have completely enjoyed you, and can you please tell the listeners where they can find you?
Yeah, debtfreedoctor.com. It's got my Instagram and my YouTube video link on there. I have a passive income guide. They can download it, and that's where you get started. Debtfreedoctor.com.
Okay. All right.
Well, thank you, Dr. Jeff, for your time. I really appreciate it that you blessed us with your presence on the Money Talk. So Thank you very much, and all this great advice and information that you provided. So I'm sure it's going to help somebody in the audience. So again, thank you for your time, Doctor.
My pleasure.
All righty. Thank you.
Mm-hmm.